Welcome to ForexTV.com. Today's Friday, April 24th. I'm Tim Kelly with your New York Forex Market Buzz. Dollar's under significant pressure today against the major currencies except for British pound as U.S. equity markets continue to strengthen. That has both crude and gold on the rise as well at midday. Now for a quick look at the latest headlines. Demand for big-ticket items in the U.S. dropped less than economists were expecting in March. That, according to the U.S. Department of Commerce, durable goods orders, excluding transportation, posted a drop of 0.6%. That despite forecasts for a 1.2% decline. Total new orders fell by 0.8% against expectations of 1.5% decline. U.S. new home sales fall in March after upward revisions to previous month. New home sales in the U.S. fell slightly in March. That due to strong upward revisions to the previous month's figure, according to the Department of Commerce. New home sales fell to an annualized pace of 356,000, a 0.6% decrease from February. The previous month's reading was 337,000 sales. That was revised up to 358,000. Economists were expecting sales to remain unchanged in the month at 337,000. In the UK, GDP growth surprised to the downside in the first quarter of 2009, suggesting that the current recession will be even deeper than initially expected. According to advanced estimates from the Office for National Statistics, overall economic activity in the UK contracted by 1.9%, its sharpest decline since Q3 of 1979. Expectations had been for a more modest decline of 1.5%, following the 1.6% fall in Q4. Also in the UK, retail sales surprised to the upside in March. Increased sales at food stores was the main driver behind the unexpected growth in UK retail sales for March. That according to the Office for National Statistics. According to the ONS, UK retail sales ticked up 3.3% in March after falling 2% in February. Today we're joined by Dan Cook, Senior Market Analyst at IG Markets. Dan, thanks for joining us today.
Glad to be here, Tim.
Hey Dan, I think you and I both agree we'd rather be talking baseball today.
Most definitely.
Probably a little bit easier to handle on a day like today. Dan, we're ending a week here with strong equities, I think largely driven by some good earnings news out of some major corporations, perhaps unexpectedly. But we will finish the week a lot stronger. Why don't we start with equities here? Are you surprised to see equities continue this run despite what is still very dire economic data? I mean, less worse, as many are saying, than it has been, but nonetheless, still very dire data.
It really is. And dire, I think I've already exhausted my thesaurus over the last 6 months using that term. The economic data isn't there to support this run. We have had some good earnings out, particularly in some financials, and the headline numbers, I say, should be, were pretty good. But two things: the expectations were already set so low, so it was hard to surprise to the downside in many cases, as well as when we look at their forward-looking forecasts, get beyond the headlines and into the meat of it, their forecasts are uncertain at best. And I don't think it's really sustainable to expect that moving forward to Q2 when we look at what the drivers have been, which is trading activity and refinancing for a lot of these big financial institutions.
Dan, we've got levels on the Dow and the S&P have broken through some significant technical levels. Right now, S&P at over the 860 mark, and the Dow comfortably, albeit on a day-to-day basis, we could go under 8,000, but 8,080 roughly on the Dow. Do these technical levels mean anything at this point to you?
Well, I think with particularly and touching on the S&P, we've kind of, as we approach that at 870 mark, as we've seen here recently, kind of gets a little bit top heavy. So we could start looking for some downward pressure in that. With the Dow, we still have a little bit of potential upside. I mean, 8,100. Anytime we have those big round numbers, could probably provide a little bit of resistance, and then really look for a top maximum around that 8,200 level. And if we double top there, again with the poor economic news, combine that with the technicals, we look for a double top. it could signify the start of another move down for the Dow.
Okay. Hey, Dan, you mentioned managing expectations, setting the bar low. Before we get into specific currencies, let's talk a little bit about market sentiment right now. And, this is at best a guessing game. I think we'll both agree there. But what's your take on market sentiment given the state of the global economy, the data that we've seen, GDP across the board, except for places like India and China? Most other countries are in recession, and looks like they will continue that for a quarter, maybe 2 quarters at least. IMF projections of global growth pretty much as bad as they can get, but you've got the U.S. administration and the Treasury and other organizations suggesting a much less margins of recession than the IMF. And what I'm getting at is we've got a lot of different opinions out here. In terms of market sentiment, with regard to gold pretty much staying flat in the last 2 weeks, and the equity markets gaining. Before we get to currency, what's your take on the overall sentiment here? Because that seems to be driving markets.
I think with the sentiment, actually, a lot of confusion is coming into play, and we've been kind of fickle on some of these things. For the large part, though, I really feel, kind of as we touched on, that the larger economic factors, the traditional indicators, GDP and those things have been kind of overlooked, probably more so than they should have been, particularly over the last 6 weeks, as we've seen in the equities. And we've seen kind of a move a little bit away from risk aversion. Looking forward, though, I look for that to come back when we read beyond the headlines again and get into the statements. Particularly out of the UK this week, we have shrinking GDP. We have their monetary policy committee saying, okay, we've got to expand our debt, not just by a little bit, but a huge amount. And so the market sentiment right now, we're trying to figure out where this could head, and there's no clear answer right now. It's been kind of surprising, actually, for the equity markets. I think that the longer-term fundamentals, though, are going to come back into play. We've got unemployment, which is a huge factor, because that really fuels the economy. If people don't have jobs, they're going to not be able to pay their mortgages. We're going to have another round of defaults, both in revolving and mortgage debt. And so I'm looking for some downward pressure moving forward, and so far the market hasn't necessarily agreed with me on that. It still seems fairly optimistic, but I'm looking for that to turn the corner here moving into next week.
Okay, Dan, let's take that and let's look at some currencies. It's I'm getting the sense that you feel that risk appetite has been a bit aggressive at this point. Are you thinking we'll see significant risk aversion in the weeks ahead?
I think we're going to move back to that model because we do have all of these indicators, and a lot of times the big economic indicators are considered somewhat lagging to an effect. In this case, I almost think they're going to be more leading. Just looking at all of the data combined, and I may not totally agree with the IMF's, as bad as that forecast is, but what we've also seen out of just individual countries, earlier this year they were projecting, May, June type of economic turnaround. Now when we read their statements, they're looking more towards, okay, December, maybe the first quarter or two of January, which tells me there's not a lot of certainty because these conditions continue to deteriorate. And it's going to catch up to us here pretty quick, and so I'm looking for that return to risk aversion.
Okay, so let's take a look at dollar yen. You and I had touched on that a little earlier today. What's your take on dollar yen? As we'll go back to the tried and true risk and safe haven play. Not sure that that's still the case with regard to the yen, but why don't we start there and give us your thoughts on dollar yen?
Well, we just actually, from a technical level, I had a big trend line going back several months. Yesterday, dollar yen broke down through that level. As we return to risk appetite, risk aversion, I think the yen's really going to be the beneficiary. I'm looking for continued downside on the dollar yen pair, and I look for that trend that started back beginning of this month. I think it was around the 6th of April when we hit that high around 101.50ish. And I look for the risk aversion to really come back into play even stronger and propel this. Right now we're at about 96, almost 97, And I really look for a lot of downward pressure in the next week or two on this particular pair.
Okay, what do you think the downside is at this point?
My first downside where I'm seeing any support is just actually about 100 pips lower than where we're at right now. I think before we see any type of little bit of bounce, we're down just right around 9,600. Again, with everything happening, we can run through these levels pretty quick, and I think that's part of the market. But ultimately, I think by the as we get into May, we could see a downside of 9,350 if we can break through that 9,600 level.
Dan, critics of that would suggest that Japan's economy is probably the worst of all. Does a carry trade come back? What is the driver for that at this point? Or is it just market sentiment? What do you think drives this down to the 93 level if in fact we get there?
Well, I think one of the things, particularly the banking sector and just kind of the methodology in Japan, I think there's still that safe haven play. With regard to the carry trade, which was really an interest rate driven, now that we've seen basically 3 to even 2 years ago, we saw Japan, who had just such a minuscule interest rate. People were just holding those higher earning interest currencies.
Right.
We've seen that whole dynamic shift and kind of break up that carry trade. But I think it's more just that risk aversion, whether it be just old habits are hard to break, because from an economic standpoint, we're all kind of going through this together, every country, and there's no good news. So I think we're really kind of going with what we know, and in those cases, the yen should be the overall winner, pretty much across the board.
Okay. Hey, Dan, let's shift our focus to a commodity currency. Again, a risk play, Aussie U.S. dollar.
Yep. With the Aussie, it actually had one of the technicals I was looking at was a big topping pattern here a little bit ago, and we saw a drop off from that. This week we've seen the Aussie gain some back, but at 7,200, I think that's a little too high for this pair. As the risk moves back in, I'm really looking at a downside, probably around 6,700. And right now on this run up, we've actually hit a Fibonacci level of just about, actually we're really approaching it right now, of just about 78.6 from that high at 73.30. This is where I look for this move to stall out. This is the one that I'm very bearish on the pair. I look for that return to risk, and I'm looking at a downside right now, really of about that 6,700 level. I think it makes more sense, economically speaking, for that to be there.
Okay. Dan, why don't we finish up with sterling? Because this has been reacting a little bit more predictably, although quite volatile, no doubt. We reached 150 level last week, a little toppish there. We retraced pretty aggressively down, and then sterling started to gain again. Just a quick data check here at 146.70. Fell off after the GDP numbers in the UK. Perhaps was bolstered by the retail sales numbers, although those were thin at best and one shot. But where do you think we go with sterling?
With sterling, there may be a little bit left to the upside. I really don't look for it to move back up, although it's as volatile as you mentioned it is. It could move back up to that previous high that we saw right around the 150.50 mark. If it does, which I don't expect it to, I'd really look for a double top there. Overall, the pressure on the pound is going to be pretty great, particularly with their expanding balance sheets. From a technical level right now, we're kind of in the middle of a move. I still could see some upside to it, but right now I think overall anything in the near to midterm, a lot of pressure on the pound, and I think that's going to drive it down. Right now we're at about 146.70 roughly. I would look for this to, by the end of next week, possibly be right back down around that 14400 level.
Okay, Dan, I know you said you're flat on your positions going into the weekend, and this has been a tough assignment trying to read the tea leaves here of the markets. So I appreciate your effort there. But next week, what should we look for? Any drivers that you'd be looking for to give us some direction here? And admittedly, on this end, a lot of analysts I speak to just don't have a very clear direction in the currency markets right now. What would you look for next week?
A few of the things, and I think we are going to see that risk aversion come back. But again, that's not as quantifiable as what I like. It's always hard to pick, an exact time when that's going to happen. So for me, it still goes back to the technicals, where I've seen support and resistance. One of the big things I'm going to watch, we have the FOMC statement next Wednesday, and I don't look for a surprise like we saw last time with the $1+ trillion balloon. Still going to be keeping a close eye on that for statements, and they could come out and shock us again, although I don't look for it. G7 meetings, even though they're not really discussing currency, coming out with a statement tonight, which will be just about it, when the markets are closing down. And so there could be some big shakeups even, so a lot of things are happening at the speed of light over the weekend. Right now it's tough to make that call. I look for a return to risk aversion, though, as we move into next week. And so I look for, the yen to be the major gainer and some strength in the dollar across the other majors.
Okay, Dan, I'm just looking at, just quickly here, I know you're a technical guy. Forgive me here, I'm just doing a data check. I just drew a Fibonacci on euro. We're from the March 23rd high of 137.45 to the lows. Actually, we were on consecutive days starting on May 20th, 21st, 23rd. We touched lows of 128. That's 128.83, and we're just about to touch that 50% retracement in euro right now. We did touch it earlier and pulled back. Any significance in that at this point?
Well, I really think it's another matter of the technicals coming together. We did, as you mentioned, we had that double bottom, which also completed a pattern that I used from the very top called a 3 drive. It wasn't perfect, but it was pretty close. Double bottom there, and so we kind of expected to see a good run up, which we have. 50% is a big number. When we combine that with the other factors in the market, I'd look for downward pressure in the euro. If it does, break up above, I'd look for that, run to end. Probably, it could, where we've seen previous tops, maybe 134, 135, I think would be a stretch for this pair right now.
Okay. Hey, Dan, thanks a lot for trying to help us navigate through a little bit of a confusing market. I appreciate you coming on the show.
My pleasure. Thank you.
This has been your New York Forex Market Buzz with Dan Cook of IG Markets. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.